Some of the biggest Trump trades are turning around. If you're long financials, materials, and small caps while being short tech and gold, you saw a big boon after the election, but now you're running into trouble. Is it time to ditch the Trump portfolio? Welcome to Trading Nation. I'm Eric Chemi. I'm joined by David Seaburg of Cowen Co and Boris Schlossberg of BK Asset Management. David, I want to start with you. What do you think about this move here in the fact that we've lost a third of the Trump trade gains from the election?
Look, I mean, I think, if you go back to the election, you look at sort of the price action of a lot of the sectors that have done well, we're still seeing, I think, incredible gains in a lot of these sectors, Trump sectors. I will say to you, with caution, the financials are a sector that we've talked about on Fast Money on this show. We just talked about it on an earlier segment. Look, the financials, they paid for it a lot, and now we've seen them consolidate a little bit here. And I do think it's going to take some time before we see a real reform, if you will, of parts of Dodd-Frank that are going to have a bigger impact. But I do believe that a longer-term trade is still set up for, I think you're fine in the financials. Again, just pausing near term. I look at technology and say technology, I think we will continue to do well. I think there's the opportunity with repatriation. A lot of these tech companies, you can see M&A continue to spike. I think that, that will bode well for tech in general. So I've got a lot of confidence there. And then, when you look at like gold, I mean, look, I think that, for the near term, you could see that as a near-term trade, maybe a little bit more upside to that. But I wouldn't be long gold here for a long term. I think that, again, just as a hedge for risk, you have a position on, but I wouldn't have that as a sustained position over the next several months.
Boris, what do you think about what Dave said, especially that move in financials, about 17% in the last 3 months? Is that really something people want to be jumping into right now?
Well, I think the whole Trump basket trade, as you were talking about, is giving back a lot of its gains because it's very much a political trade. And just as the political enthusiasm for a lot of his policies has really waned, because much of what Trump has done since he's taken office has been focused on the politics rather than economics. The whole Trump trade was based on the idea of deregulation, lower taxation, and full-on force of fiscal spending. None of those policy initiatives have been enacted. It's been much more towards protectionism and towards anti-terrorism. And the market, I think, is losing patience, and that is why you're seeing the whole Trump portfolio basket trade move off. Now, if he reasserts his economic policy, and if he comes back to those ideas quickly, those trades are going to come right back. But if he again wallows in much more political issues as we go forward, I think you're going to see much more of a correction than you currently have seen.
David, what do you think about what Boris just said, that the market is running out of patience with what Trump's doing?
No, I think it's just, I think the market's opening their eyes. And, again, it was a political trade out of the gate and massive underpositioning. So the underpositioning component is extremely important. I mean, people had very, small positions on a lot of these financials. They drove these stocks up. They obviously took maybe 50% of what they were looking at to establish as far as exposure. But now we're at the point where you're right. You have to see a little bit of, give from the standpoint of policy execution. My expectations are we're going to. I don't think back tax is going to come through. I absolutely don't. Do I think repatriation is going to happen? I do. And I think that's going to be an offset to tax cuts. Tax cuts are the most important thing, corporate and individual, to drive this economy. And I think he's going to come out with an announcement that's going to be very productive. I think it's going to have an impact, and it's going to drive stocks higher, including, I think, the financials, given the fact that spending increases.
So
I think it just takes small amounts of positive signs, if you will, for this sector to continue its move higher.
So I agree with David that, yes, if we come to see these things come to fruition right now, very much the trade comes back. But until he does those points, until he actually comes out with any kind of economic initiative, especially on taxation and deregulation, I think that trade just basically flounders right now. And the longer he waits, the more it flounders, which is why I think you could see more of a correction in it before it resumes its rally.
I feel like we could go on a lot longer with both of you talking about what's going to happen here, but we got to leave it there.
Get ready.
We got to leave it there. David and Boris, thank you so much for joining us here on Trading Nation.
Guys.
I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.